The Architect of the Digital Age, a comprehensive guide to Taiwan Semiconductor Manufacturing Company, TSM. As of January 17, 2026, Taiwan Semiconductor Manufacturing Company, TSMC, stands as the most critical company in the global economy. If you are using a smartphone, driving a modern electric car, or interacting with an AI like me, you are likely relying on the handiwork of TSMC. For an investor in 2026, TSMC, ticker TSM, represents a picks and shovels play on the entire technology sector. Unlike Nvidia or Apple, which design chips, TSMC is the foundry, the actual factory that turns those designs into physical silicon. This guide explores TSMC's dominant 2026 position, the transition to the 2nm, 2nm era, and the geopolitical tightrope the company walks every day. 1. The business model, the Switzerland of silicon. TSMC pioneered the foundry model in 1987. They do not design, market, or sell their own branded chips. Instead, they manufacture chips for everyone else. A neutral powerhouse. This neutrality is their greatest strength. Because they don't compete with their customers, companies like Apple, Nvidia, AMD, and Qualcomm are comfortable sharing their most sensitive designs with TSMC. Monopoly on advanced nodes. In 2026, TSMC holds roughly 72% of the total foundry market and over 90% of the market for the world's most advanced chips, 7nm and below. The Advanced Packaging Moat. Manufacturing the chip is only half the battle. In 2026, the focus has shifted to CoWoS, chip on wafer on substrate, a specialized way of stacking chips to make them faster. TSMC's capacity for this is the primary bottleneck for AI hardware. If you can't get CoWoS space at TSMC, you can't build a high-end AI GPU. 2. The 2026 inflection point, the 2nm gigacycle. In the world of chips, smaller is always better. Smaller transistors mean more processing power and less energy consumption. The transition to 2nm, N2. As of January 2026, TSMC has officially entered the 2nm era. Mass production began in late 2025 at its fabs in Hsinchu and Kaohsiung. Fully booked. Reports indicate that TSMC's 2nm capacity is already fully booked through the end of 2026. GAA architecture. This node marks a massive shift from traditional FinFET to gate-around-around transistors, which offer 15% better performance or 30% better power efficiency. Customer lock-in. Apple has reportedly secured more than half of the initial 2nm capacity for its 2026 devices, likely the iPhone 18. Following closely are Nvidia and AMD, which need these chips to power the next generation of AI superclusters. 3. Financial strength, a fortress balance sheet. On January 15, 2026, TSMC released its Q4 2025 earnings, which blew past Wall Street expectations and sent the stock towards its all-time high. Key financial metrics as of January 17, 2026. Stock price, approximately $342.26. Market capitalization, approximately $1.77 trillion. Gross margin, an incredible 62.3%, showing their massive pricing power over customers like Nvidia. Capital expenditure, CAX. Management announced a record-breaking 2026 budget of $52 billion to $56 billion. Why this matters? This is the ultimate vote of confidence. TSMC is spending more on new factories in a single year than the entire market value of many of its competitors. The dividend. TSMC has significantly increased its payout, with a current dividend yield of approximately 0.73%. While not a high-yield stock, it is a consistent dividend grower that appeals to long-term institutional investors. 4. Geographic diversification, the Arizona Silicon Fortress. The biggest criticism of TSMC has always been its concentration in Taiwan. In 2026, the company is moving aggressively to de-risk its geography. The Arizona Megafab Cluster. Fab 1, currently in high-volume production of 4nm chips in Phoenix. Fab 2, TSMC recently pulled forward the mass production schedule for its second Arizona plant to the second half of 2027. It will focus on 3nm technology. Advanced Packaging, AP1. In a major move, TSMC is building its first US-based advanced packaging facility in Arizona. This allows a chip to be made and packaged entirely on US soil for the first time in decades. The US-Taiwan trade deal. Recent reports suggest TSMC is preparing a massive new phase of its US build-out that could eventually reach 11 total fabs in Arizona, linked to a proposed trade deal that would reduce US tariffs on Taiwanese goods. 5. The risks, what every investor should know. No investment is without danger, and TSMC has a unique set of risks. Geopolitical. This remains the elephant in the room. While TSMC is diversifying, its most advanced R&D and highest volume production still reside in Taiwan. Any military conflict or blockade in the Taiwan Strait would likely lead to a global economic shutdown and a collapse in TSMC's stock price. Margin dilution.
Building factories in the US, Japan, and Germany is significantly more expensive than in Taiwan. Management expects a 2 to 3 percentage point hit to gross margins in 2026 as these higher-cost overseas operations ramp up. The thermal wall. As chips get smaller, 2 nanometer and below, they generate extreme heat. If the industry hits a physics wall where chips become too hot to cool efficiently, the demand for even smaller nodes could slow down, hurting TSMC's growth engine. 6. Investment strategy. How to approach TSM. If you are looking to invest in TSMC in early 2026, consider these professional perspectives. The valuation play. At a forward price-to-earnings (PE) ratio of roughly 27x, TSMC is often seen as cheaper than its customers like Nvidia, which can trade at 40x plus. You're buying the infrastructure for a lower multiple than the designers. The AI benchmark. TSMC's quarterly guidance is the best indicator for the health of the entire tech world. If TSMC says they are seeing voracious demand, it usually means a green light for the entire AI sector. Dollar cost averaging. Given the geopolitical volatility, many investors choose not to buy a full position all at once, instead buying a fixed dollar amount every month to average their entry price. Conclusion. The pulse of the AI boom. TSMC enters 2026 as an undisputed monopoly of the high-end semiconductor manufacturing process. It is the company that makes the AI revolution possible. The verdict. While the geopolitical risks are permanent, the moat around TSMC has never been wider. It is virtually impossible for a competitor, like Intel or Samsung, to catch up to their yields and scale in the next 3 to 5 years. For an investor, TSMC is a bet on the continuation of the digital and AI eras.